Hey folks, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, December 7, 2017. Looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. And we actually had somewhat of a decent update today. The Spiders were up about $1 or a little less than 0.4%. I thought we would retest the lows this week from last week, right around that 260.66 area, give or take a little bit. It's still not out of the question. Tomorrow is the phony jobs number. We get the report from the Bureau of Labor Statistics, and they'll come out with the employment report, non-farm payroll report, and anything goes when that happens. But basically, the way this market is going, and as we get closer and closer to the Christmas holiday, it's less and less likely that we're going to see A, heavy volume, and B, any kind of significant downside whatsoever. In fact, even if we did test the lows from last week down around that 260 and change area, that's about all I would be expecting. You can see here how the 20-period moving average has already sloped up into that area, and that would be supportive of the market one way or the other. I wasn't really looking for much more downside than that, but I am or was, and still could be, still am looking for a retest of that area. Maybe it happens tomorrow, maybe it doesn't, but it's still possible into next week. What do we have next week? We have two things going on. A, it's options expiration week. B, it's the last full week of trading before the Christmas holiday. Check that. It's not. The next week is. My fault. Excuse me. The third thing we have is an announcement from the FOMC. So the Fed meets and they're going to make an interest rate announcement next Wednesday. I think most of the market participants are expecting the Fed to raise interest rates probably 1/4 point. It's really not that big of a deal one way or the other. Whether they do or they don't shouldn't really have any impact on the market. It's more of a psychological thing than anything else. For example, if they raised more than people expect, everybody gets a little bit out of the ordinary, or the market could get a little whippy about that. If they don't raise interest rates, maybe that's positive, maybe it's negative. They make up all kinds of stories on both sides of the equation, both sides of the coin. So all in all, the expectation is for a 1/4 point increase. I don't think it's a big deal one way or the other. We'll see what happens with the Fed announcement and what their commentary is following the announcement, but I'm not expecting any kind of big deal around that, especially as close as we are to the holidays. I find it very hard to believe that we would get any significant downside in this market between now and the end of the year. It's possible, it's just not probable. Remember, the big picture is this is a raging bull market. We're above all the moving averages on all time frames. It's in a very, very strong bullish position, and higher prices are certainly coming into next year. Now, I don't say that meaning there's not going to be any corrections or pullbacks, and I don't necessarily think today that we'll finish the year higher or lower than we start. I have to see how the year unfolds first. And generally speaking, we get a good idea of what's in store for next year using two methods. Number one is using cycles, which didn't work this year, but they normally work. 80% of the time the cycle is going to be right. We just didn't have any meaningful correction this year. And the second thing is we look to January for some kind of a turn or a pivot, quote unquote, in the market in January to see and provide some indication of what's in store for the year. Then we'll normally get some kind of a low or a high made in March generally, and we go on from there. I'll start to unpack some of the cycle work that I'll do for 2018 as we get closer and into the holiday season, in the holiday time frame around Christmas. I'll have some time on my hands and I'll start to work on a forecast for 2018. Right now, nothing we need to be concerned with today. All we need to know is it's a bullish market, it's in an uptrend. Any kind of a pullback would be a pullback that can and most likely will be bought, and I don't expect anything below the 20-period moving average at this point in time. If we get something like that, we'll discuss it at the time, but that's not my expectation today. When we look over at the IWM, what I find interesting is where we found support yesterday and today. So yesterday's lows and today's low was right around the top end of the upsloping trend line drawn over from the long-term monthly chart. We talked about it last night, and you can see here where the low was today, where the low is yesterday, pretty much right on top of the 20-period moving average. And basically what the IWM did was it sold off for about 3 days. It worked off the shorter-term overbought condition. It came back toward home base. Home base is the 20-period moving average. And today we had a nice up day, about 0.75%. So we're staying above the upsloping trend line. This is certainly bullish. As long as we close the month of December above this trend line, that leaves the IWM in the most bullish position it can be in. I guess on one hand, you can say the last 3 days of downside activity in the IWM could have been an attempt at a retest of last week's lows, at least in the IWM. We didn't see anything like that in the Spider, but we did see a nice pullback in the IWM, and we have been supported by the top end or the top side of the upsloping trend line. Pretty amazing, pretty interesting how that trend line works over and over and over again. Today in the Dow Jones Transportation Average, my second favorite leading indicator, the first being the IWM, you can see here we were right back up yesterday and the day before. Yesterday was a pause day. The day before we had a nice pullback, and the day before that we had a nice decline from the highs that were made, but we're right back up, and this is just all out bullish. There's no other way to look at it. The only issue for me is the distance we are away from home base. The red sloping trend line is the 20-period moving average, and in my mind, this has to either go sideways, and I've been talking about this for the last few days. It has to go sideways and let the 20-period moving average work its way up to price, or price has to come down toward the moving average, or a combination of both. And that really has to happen in order for the transports to get a decent reset and go back to the bullish position. Well, it isn't a bullish position, but go back into bullish mode and work its way higher. It can't really get too far away from home base without really working off the overbought condition. Right now, this is really a severely overbought condition. Doesn't mean it can't go higher. Markets can always go a lot higher and a lot lower than people think they can. But all in all, over the long term, it's got to come back toward home base, or it's got to eat some time off the clock and let home base work its way up to price. Definitely the strong horse today, up 1.33% on the transports. Gold getting taken out behind the woodshed, down quite a bit today, $17, 1.33%. And you can see here from the daily chart perspective, I was suspect that this level would hold. It held intraday for some minor bounces off that level for the trading side of the business, the intraday trading side of the business. But from a swing trade perspective, any kind of longer term hold, we talked about this the last couple of days. I wasn't too keen on the 1255 spot 60 area because we consolidated for too long above that level, too close to that level. And therefore, you really want to look lower, and I'm looking down to that 1230 area, anywhere in this zone down here, give or take a few dollars. I'm going to be looking for signs of a reversal or a trend change in the gold market. Here's a 10-minute chart, intraday chart of gold, and here's what I'm talking about. You can see here that the first hit that we made, which was actually at 7:30 this morning, we made a low of 1255 spot 50, just 10 cents below the actual trend line drawn in here several days ago. And we had a little bit of a rally off that. I wouldn't call it a rally, call it a little bounce off that level, made a high up about $3, and then we rolled over. And once we consolidated in and around that level, we broke down, and that was all she wrote. We may come back to test the underside of that level at some point, but I'm really looking for the 1230 area, give or take. That's where I'm looking to potentially get long gold, but I have to see the signal of a trend change or a reversal, high volume reversal day, a reversal candle, a doji candle. Generally, I'll know it when I see it, but that's the price level that I'll be looking for one of those things to take place in the gold market. Silver also taken out behind the woodshed. We're targeting 1550 It's pretty close right now. We could get there within the next couple of days, maybe even tomorrow. That's certainly possible. If we get a reversal in that neighborhood, same routine, depending on the reversal. And if we get a high volume reversal, that would be an opportunity to get long the silver market. And you have something to be long against. And right here, you have this low of $15 spot 332. That would be a price level that you can use as a daily chart stop out. So if we get down into the 15.5 neighborhood, slightly above, slightly below, and we see the sign of a reversal, a high volume reversal candle, sign of a trend change in some way, shape, or form, then we have something to trade against. We know where we're wrong. And if the silver market were to trade below and close below on the daily chart, this low over here that we just cited, then you have to, stop yourself out of the trade and move along and wait for another particular price area. You're hearing things like people are selling gold and silver because they want to be in Bitcoin, all that kind of stuff. And that's the kind of discussion that we like to hear, right? When nobody wants something, that's when we start looking for a price area and the type of trend change signal that we're looking for in order to get long a particular instrument. So right now, gold and silver are out of favor, and theoretically, as far as the talking heads on TV are concerned, they're out of favor because of Bitcoin, and we haven't talked about Bitcoin here, and I'm well aware of what's going on in Bitcoin. It's just almost in the silly camp. I mean, I'm looking at it right now, and it's up 14% today, over 16,000. I think it was just 10,000 last week at one point. So it is a little bit ridiculous, but it is, and I'll just digress for a second, it is going to trade on the CME. They're going to trade Bitcoin futures, and once that happens, we'll get some price discovery in Bitcoin. Right now, there really are no sellers. There are only buyers of Bitcoin. Other than having a Coinbase account or one of the other mechanisms where you can buy or sell your Bitcoin if you actually own the Bitcoin, that's the only way to either buy or sell it today. But once there's price discovery and the market becomes a real market, then it should come back down to planet Earth. And I'm not saying it won't be triple this, 2 years from now. I have no idea right now. All I'm saying is that it's basically been a straight line up because there are no sellers. So once it starts trading every single day and it has buyers and sellers, we should get some real price discovery, and then we'll be able to determine, chart patterns and where it's headed one direction or the other. Right now, it's been just a straight line up. And by the way, I'll just show you a chart of Bitcoin. I mean, what do you do with this? First of all, you can't trade it. This is just in the Bitcoin index, but this is not tradable. It's not a product yet until either next week or the week after. I'm not exactly sure when it's going to launch on the CME and how it's going to trade. I'm sure you're going to need a lot of margin to trade Bitcoin futures, but I'm not real sure. Just haven't done the research on how it's going to trade, in what kind of increments and what margin you might need and all that stuff. And that'll all shake out over the next couple of weeks. But as you can see, this has just been a one-way ticket higher, and there's really nothing you can do with it. You can't sell it. You can only buy it through one of these exchanges like Coinbase. And other than that, I really don't profess to know much about it, other than the fact that I'll add a little color to a funny story. Right in here, all right, my son was hammering me saying he wanted to buy Bitcoin, he wanted to open a Coinbase account and all this stuff, and he just wanted to buy a little bit. And I told him right in here, less than I think it was about 7,500. I told him, well, it looks like it might be topping out here. And obviously it ended up putting in a bullish pattern, pulled back a little bit, and then it just took off. But I told him, well, it looks like it's topping out. We had 3 big up days in a row. Looks like a topping tail. And I said, why don't you wait a little bit, let it pull back, and then, we'll take a look at it. Well, he thinks that I'm not exactly the brightest bulb in the lamp right now because it took off and he doesn't have any, and so he obviously blames me. But that's okay. You're only as good as your last trade. As far as he's concerned, I'm no good. Just to wrap up the Bitcoin conversation, I would suspect that once it starts trading on the CME and there are buyers and sellers, I would suspect that that would mark at least a temporary top for some kind of a retracement to take place. It's just lining up too good for that to not happen. So at some point, I would think that when it starts trading, you'll get a pullback, and you'll probably get a pullback down into this consolidation area, maybe be supported right around 10,000 or slightly above that, something in that neighborhood. And that would be most likely an area that I may get interested. And this is really the actual area. I would love 8,000. This is the breakout. This is what's called the scene of the crime. And so 8,000, 10,000 in this zone is really where Bitcoin should retreat to. Then everybody will say that the run is over, nobody will want it, and then it'll take off again to the upside. That's kind of how I see it unfolding. I see it starting to pull back when there's actually sellers in a marketplace. Since we don't talk about GDX all that much, but I do know that there are several traders out there that like to play the GDX, at least a handful of you anyway. I thought I would give you my comments on GDX. It looks like it tried to find a bottom today. I'm not sure that it did. I would be interested in GDX around 21. What was the low today? The low was 21.40. It's pretty close anyway. I mean, I was looking for it to get down to 21 down in this neck of the woods, this double bottom area. Maybe it's 21 and a half. That maybe I'm wrong. Maybe today was the low. We'll see. Usually, and here's the reason I'm bringing it up. Usually, you'll see a reversal or a change in character in GDX before you see a trend change in gold. Now, I do think that gold has lower to go, and I would think that GDX would follow suit. And so I'm still going to kind of hold out for that 21 area. But if I'm right and gold bottoms where I think it'll bottom, and GDX comes anywhere near 21, I think that would be a really, really solid area to take a crack at GDX, because again, you have something to trade against. If you began closing significantly below the low from over here, and the low from here is basically 20.99, this is 21 even, so 20.99, if you close below that, you move out of the trade or you look for the next support area, which probably isn't that far off. I would say 21 and a quarter, 21, maybe even right here. I don't think so, but on the chance that it bottomed today, which I don't think it did, in this general area, I think you'll be rewarded. The next area below this level of $20.99 is really down at 20.40, 20.25, in that neighborhood. So it's not really that far away, and in the big scheme of things, I still think a buyer down in the 21 area will be rewarded long term. It's just one of those instruments you got to hold for a while, and you'll get a run out of it. And they usually put together, multi-day, multi-week runs, and as well as sell-offs. So these tend to go in streaks, and so I would be looking to hold this for a period of time to see if you can't catch a streak in GDX. Crude oil had a little bounce up today, a nice little rally up a little over 1%. Got back above the 56.40 area. I thought that area was important. We cut through it yesterday, but bounced right back today. Not 100% sure if this is done on the downside, but even if it's not, I still contend that this $55 area where this upsloping trend line crosses where this double bottom support area would be over here, that's really an area that's interesting to me. Beyond that, you would have to look all the way down a lot lower. You would have to look down here, which is really the ultimate breakout point. And this is also called the scene of the crime. It's really maybe this pivot top here, somewhere in this neighborhood. And that neighborhood happens to be, that pivot top happens to be at a high of 53.28. So somewhere in that 53 and a quarter to 53.50 area, maybe even as low as 53. If this doesn't hold, if we still come down farther and this doesn't hold, then I'm going to have to look down at 53. But I'm not convinced this won't hold. I still think it's in an uptrend. And as long as this does hold, it's in an uptrend. This upsloping trend line will determine whether crude oil stays in this short-term uptrend or not. The bond market pulled back a little bit today, but we're above all the moving averages. And I think it was just a little bit of a pullback after, a rally for 4 days essentially, or 5 days off the bottom down here from the 30th of November. So this is just a pullback. It's garden variety. I wouldn't read into it. It really is trying to break out above these highs. And let me give you the first indication that it is breaking out above those highs. And I think today was maybe just a fake out sell-off day, because on yesterday, we had a close. Let me move this over, and I want to show you, this is what's important to me. We had a close of 154.2. 154.2. The high of this red candle is 153.22. So we closed above that red candle high. To me, that's the first indication. Now, it doesn't, it's not 100% of the time, and we can certainly fail and go back down and all that stuff. But that's the first indication to me. That's the chart's way of telling me, or telling us, that the bond market wants to go higher. The fact that we were able to close yesterday above this red candle high is evidence that it's going to move higher. The bond market is going to move higher. Now, today they pull right back, and maybe it's a failure, maybe it's not. We'll know more over the next couple of days, but to me, that's the first sign that the bond market wants to move higher. I'm watching it closely. We'll see. And the dollar continues to run higher. We've gotten above the 100, obviously, the 20 period and the 50 period, which is the blue trend line. We've gotten above those moving averages, which I didn't think we were going to do so fast. And I was wrong again on the dollar. So I've been wrong on the dollar quite a bit this year. So I'm going to stay away from the dollar for the time being. If we close above this red candle high, it's the same routine we just discussed in the bond market. That'll be a sign that the dollar wants to move higher. If we're rejected at this red candle high, then we'll go lower. So we have to wait and see. It's a waiting game. Hurry up and wait. See what the dollar does. By the time it does it, the trade is over. I know the routine. We'll take a look again tomorrow night. I always look on Friday because that's the weekly close for all the markets. And you can see here where last week we tested the 200 period moving average and failed. Today we got above, or this week we got above the 200 period moving average, 200 week moving average. It'll be interesting to see after closing below it 2 weeks in a row, do we close back above it, and will that be a sign of higher prices to come? So be very interested to see where we close the week on the dollar by tomorrow's close. And will the dollar be impacted? And usually it is. Usually all the markets are impacted by the phony jobs number, and then of course next week with the Fed. So it'll be interesting to see the bond market and the dollar and all the other markets around the Fed announcement next Wednesday. So with that, I'm going to give it a wrap tonight. It's everything I wanted to and intended to discuss. I'm David Frost, My Strategic Forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.